Doing? Hope everyone's doing okay during the pandemic. Right now it is Sunday, June 14th, 2020. So, if you're new to investing like I am, you probably want to know, what do you want to invest in? Well, it really comes down to you as a person. Can you take risk? Can you take seeing the stock go up and down, your portfolio losing money very fast? Probably not. You probably want to be safe at first. Most people want to be safe at first. You very rarely want to just jump in and start spending money. At least that's what I am. Maybe you're crazy and you're okay with losing a lot of money. So let's look at the S&P 500, which is the top 500 companies in the U.S. market. It has been doing pretty good the past 5 years. Very steady growth, doing very well. Obviously, because of the coronavirus, we just dropped a whole bunch in March. If you've been watching any stock market videos of any kind talking about dips and stuff, they keep saying March like crazy because in March we had one of the biggest dips in history and stocks went down like crazy, which is actually a good time to buy because now they're discounted. But a lot of people don't see that. People were selling, which is just making it worse. You don't want to have paper hands. You want to have diamond hands and hold on to your stock. Otherwise, why are you even investing? You might as well just go gamble. The S&P has not recovered back to its full, but it is climbing. Now, recently, this past week, 5 day, we had a big dip. Why is that? Because coronavirus cases are starting to pop up more because states are opening up, scaring people. Mostly the people with paper hands, they're selling. They're thinking, oh, the world's going back to hell. Let's sell, let's sell, let's sell. It just honestly ruins it for everyone else. You need to have faith in the economy. I mean, I don't know why people are so doom and gloom. They're always thinking the worst of everything, but that's just the bear market for you, I guess. Looking over at the Nasdaq is more technology based, which is great for the stay at home because, well, we're staying at home, so we're not going to be, going out. We're going to be using our technology, which is great for us. The Nasdaq broke its high. It's doing great. Now, how do you want to invest in these two composites that are very safe and very good investments to do? I personally use Fidelity. This is the Fidelity 500 index fund, having great returns annual. These are annual returns, doing great returns if you were holding these. So it just shows same thing with the Nasdaq, great returns if you're holding these investments. People don't like to think about that. They want to sell. Also, very low expense ratios on both. So that's one thing to look at. Or you might want to be a pick and choose. You don't want to do just straight index funds. Maybe you want to be more active investing. So let's go over to Robinhood and look at individual stocks that are discounted right now. Everyone's talking about airlines because airlines took a huge dive because of the coronavirus. We all know no one is flying. No one's flying because, well, no one wants to get sick, no one wants to die. So no one's flying, no one's going anywhere. Huge dip. Look at the 5 year. Delta trades, and most airlines are pretty flat. They trade around a normal ish range of stuff, of prices. Delta is around the 50, a little bit more dollar mark. They're all the way down to $30. That's about a $20 gain if it goes back to its normal 50 per share. Same thing with United. If we look at the 5 year, pretty flat trading. United has a bit bigger of a standard deviation, I'd say, but it's still discounted. So you're guaranteed to make money we start opening. Once airlines start getting more customers, even though we're opening up, people are still going to be scared because cases are going up. I personally like Southwest. It's cheaper for college students, people that don't have a lot of money. Around another good standard area in price, discounted very heavily at 36. Great investment. Another good investment, credit companies. Why? A lot of people don't have money because we only got one stimulus check. I don't know how they expect us to live off 1,200. That was a while ago, and I'm assuming they're thinking people have money in their savings. But I've seen a bunch of reports and articles saying most Americans don't even have $500 cash in their savings. That's probably true, especially for millennials and us younger generations, we just don't carry a lot of cash. One, it's kind of stupid. Most people don't have high yield savings accounts. That's another topic. But if you just hold cash, you're kind of screwing yourself over. But you should have at least some cash. It's always good to have some cash. Even if you had the $500 that most Americans don't have, that would only be plus a stimulus check, 1,700, and we're still barely opening up. People need more money to live. I don't understand what they possibly think could happen. If we look at the MasterCard 5 year, it has steady growth. It's doing great. It's recovered very well, V-shaped, because why? People need money. They're going out and getting credit cards. They're spending their using their credit cards because they need stuff to live. It doesn't make sense why people like these why the government and why people are shocked at the fact that people have no money. It's because they're not working. I don't understand where they think money can come from. It doesn't just come out of trees. So people need money. They're going to go out and get credit cards. They're going to go get loans because they need to survive. So these are two great investments. They're probably going to climb. They're not super discounted, but they're probably going to climb. Carnival Cruises, basically another flat trading company, but what's great about Carnival is it's a huge bet on whether you think this will die down and whether they will start doing trips later in the summer. Carnival Cruises makes most of their money during the summer because why? People are going on vacations during the summer. So right now, as I'm filming this, it's June. It doesn't look like they're going to be sailing anytime soon, but they're trying to, and if they don't, it will probably go bankrupt. That's why this is a risky investment. But as you can see, it's heavily discounted right now. 19 bucks, trading around the 50 to even almost $70 range. 20 bucks is heavily discounted. I mean, like crazy discounted. If it went up to 50, that's $30 markup per share. That's crazy ROI, crazy return. It's just great. And then over here, this is similar to the Fidelity NASDAQ composite, but this is an ETF, so more tradable. This is QQQ. This matches the NASDAQ, so great returns. Isn't really what I was going to talk about. It was more TQQQ. This is a very more risky investment. As you can see, they're basically the same except for around here because leverage ETFs have decay. But let's say you bought around here and it climbed, you'd have insane gains right now. I mean, like, it'd be crazy how much money you would have made because leverage ETFs are good during bull markets. The Nasdaq is I think usually going to be in a bull market because their products or the companies with their products are kind of always being sought out for. I mean, the Nasdaq is usually always going to be climbing eventually. And if you bought here, even if it didn't reach its old high, you're still up 350%, which is insane compared to QQQ that even broke its high. You're up 115. But every YouTube video I've ever seen talking about leverage ETFs are always saying it's dangerous because of this right here. If you bought up here, it hasn't recovered because of the decay of the leverage because it's 3 times. That's up to you. Personally, I think if you have faith in the NASDAQ and you're a bull investor, I think this is good because, I mean, if you think this is going to go up from, where's it at, 84, if you think this is going to go up, maybe even back to like the 115 to 120, you're going to make a lot of money if you think the NASDAQ will continue to grow and continue to prosper. At the end of the day, it really comes down to who you are as an investor. Are you bullish? Are you bearish? Or basically, are you risky or do you not want to have any risk? You should honestly have a mixture of both. You don't have to be all in on one, all in on the other, but you should do your due diligence, look into everything, look into each stock, think about what you as a person want to risk because the stock market is a risk. Anyways, that's it. Hope you all have a great day. See you later.